So this is my idea for a better virtual banking and loaning system than traditional banks that rely on credit scores that might not be the best informed or might not be the best equal and have a lot of shady businesses in the back and more peer-to-peer while still not being more certifiable. First of all, how does a regular bank work? At its simplest, banks give out loans, which you have to pay back over a while, and that makes them money. Now, to get them money for the loans, they have people deposit money into them in bank accounts, and they give some of the profit from the loans into your bank account. Now, then they added stuff to make more profit that they include in the system, such as services, which they charge fees on from you, and other things, but they try to make your life supposedly easier by faster transactions and stuff. The other things they do is stocks and stuff like that to increase their profits and more complex financial instruments. However, there's a bunch of problems with the traditional system. One is your credit score, which is how much they can give you loans out. They've shown it has so many bias, and oftentimes the reporting agencies are not transparent at all of how they calculate it, and they make mistakes. They mix up people's identities and so on and so on. And they also have ways they might give you loans that they expect you to fail because they've taken out sorts, as I've discussed in other videos, against you. And sorts are a way that they can make money off of people failing or companies failing and losing profits by betting against them. They kind of make a bet that you'll fail and they get money off of that. They can do other shady things, and they might not really know you. And also sometimes you might want more donations and stuff, or a very small loan, or they might put up risky loans to make a maximum profit out of you. So this is a system that I think if put in place by a government, hopefully that helps back it up, in a non-for-profit way, as much in that there's no real central, is that most of the people working are not working for much profit or any, that I think would work. How would loans be handled? Well, instead of a normal credit score, you have a couple things going in. You have your peers, you can put an online profile for your request and about yourself, and so on and so on, and your peers can review it and review how and give you judgment. Now this can have as much personal information or as little personal information as you want. It's up to you. You can put a specific why you want the loan or at least specific. It's up to you what information you put out there. You have a reviewer. You can also hire a reviewer for a little extra money to review stuff more in depth. And the reviewer the more money you give the reviewer, the more money they can start reviewing this whole thing in depth and giving it a better risk assessment. Then there's a payment history, and always go in calculation of your work with this system in the past. Then you put up your request for money and looks at other people's requests and stuff. And then it takes all this information and looks at it for a bunch of people, and an algorithm then judges how much risk you have to pay this up. And then puts that in a risk thing and decides to grant it or not to grant it based on a bunch of things. But none of these things are deciding whether you get a loan or not. These are all things that is going to algorithm, with as much of it that is not based on human beings. Now, bias data in will equal bias data out, but the algorithm is more likely to see that if all the reviewers, for example, are overinflating the price for one group and think one group is going to do a lot better than they do, the algorithm is going to detect that. Or if you're paying off reviewers, it's going to detect that. Stuff like that. So it's a little harder to do it with the algorithm being one step and having all these different things, inputs that can look at more non-traditional ones. Next thing is you can ask for a loan to be displayed, and you can ask for donations to your cause, like a GoFundMe and stuff, which means that your loan could be even less money. It could be even not a loan, just a donation set up. to buy a house or something, or it can be partially covered, so you only have to pay only 50% of the loan, 50% of it's not. And you can also put tags in it for what it is, and so people might invest in it if it's more risky because they like what you're putting up there. Then it puts out a risk and decides how much money to give you at some point for the risk of you paying it back or not. The next part of the algorithm is you put your money in like a bank account. But this bank account, then you put it in and say how much risk to profit ratio you want. The higher risk, you say I want a I'm willing to take a lot of risk, or I'm not allowed to take a lot of risk, and then it calculates the amount of profit you could get or lose, and you can put more complex formulas. So you could have a bank account that is only investing in non-risky loans, when it's investing in very risky loans, but you can get a lot more money if it's successful. And this whole system is just based on trust, without people actually going to get people's houses or something. So if people default here, they're not going to lose their house or something. They will not be able to get a loan as easily, but they're not going to lose stuff they have. So then you have, and you can also put this with other business ventures and stuff. So then you have this risk profit portfolio that calculates the risk and profit. You can also invest in stuff based on tags. So people can put tags or stuff in their profile, or they're asking for money for, like housing or something. So you can invest in a certain market that you predict is going better or not. Or you can, something you're passionate about, like maybe you had to take a higher risk to help people afford first-time homeowners or something like that. Because you know that even if you lose money, at least it helps you someone get their first-time house. Another way is that there'll be advertisement money on here and ads on the side, and that will help this boost the system. So even if you lose money on these loans, that some of the money you might regain it from the ad money of the site. The fourth way, I think this peer-to-peer loaning system could work, and with government backing up, the government would be the one that does the reviews and algorithms for non-profit, so there's not a profit motive, is that the insurance would be, there'll be insurance that's what I call non-judged insurance. And this is an insurance scheme where you put in money, and for whatever reason you want, you can take it out. But you can't take, the longer you put in money, the more you can take out all of a sudden. But elsewise, if you don't take it out, but then you lose some money. So it's like a long-term store. How better way? So insurance works that you put in money, and a bunch of other people put in money. Let's say every 100 people put in $1. So it's $100, and you bet that most people are not going to need that money. One person is going to need $50, and that person can get the $50 during an emergency. So this will work in the same way that you put in money, and everyone else puts in money, a little bit of money that you don't have access to. But in case of a big emergency, suddenly we'll give you a bunch of money on a limited basis if there's not too many claims or something. And then once you put in that money, after years, it gets it. So it's just like a safety deposit box. And we can put in extra money. Now if you put in extra money, the reason why everyone's not going to pull out $500 and just make the system crash is that we put in a cap based on that you can't take out more money than you've put into the system without paying it back, or that you have to, or that your interest rates are going to come zero. Now, the government can step in, or other reviewers to refund you back your money if they find out it's a certain case, but this is a way you can get your money without anyone have to review it quickly during an emergency. Well, thank you very much for listening. Please like and subscribe. It really helps the channel out. I'm trying to reach 1,000 subscribers in a year and 4,000 watch hours, which is really hard. But with your help, I think you can do it. Also, if you have any ideas for future videos, comments, or suggestions, please leave in the comment section below. Again, thank you very much.